Hello, traders. Man, what an exciting day. What an exciting, not exciting freaking day. What was exciting about it to me was if you watched my last video, I know about four people did. Um, Maybe you were one of them. It's who wants to be a millionaire? Okay. Today wasn't a let's take the low or the high and run like the wind. But look at this right here. You see that touch? That was the highest it ever got for the rest of the day, right there at the opening candle low. We hit it here, made a big run down, took out that 4 hour low. That's a trade all of itself. That was 200 points. Yeah, right at it. Yeah, it got almost all the way to 100. So if you just jumped in there and you were expecting a revisit, if you just jumped in there and tried to grab 100 points, you got it right there. Boom. This candle here was kind of scary, and that one, the opening candle, 80 freaking points, was a little scary too. And all this chop was a little scary too. So, but if you look at it like that, I mean, we never even took the high. We come down, we leave that low, touch it, fall freaking out of bed. That was, that was a good move. That was a nice move. And then we kind of meander around a while and we come back up and we touch it again and fall out of bed again. Now, these candles are scary. This was a rough day. If you were in the wrong direction, you got smoked big time. This one's like 60, 70 points. This one's 80 points. This one's 116 points in one minute candle. So it was not for the faint of heart today. It was scary trading. I say scary, but it was just volatile. But if you managed to notice that touched the bottom of that and you got short there and just closed your eyes and prayed, man, you caught the run. You caught the run of the day. The thing that made me nervous about that one was we had already taken this 4 hour low. And I was actually long from right here. I did make a little bit of money on the trade, but not as much as I should have. And what I should have done was take the short. And I may have decided to, was like somewhere around here, and then got smoked on this because this is a big move. If I got in right there, 25-point stop loss, that went up 50 points. So at some point, I was like, all right, I'm waiting till it finds a bottom. And it just kept cranking and cranking and cranking. And I'm like, my goodness, I'm missing all this move. But I'd identified an area down here that it met all the criteria. It was a 4 hour regular trading hour low. It was a daily low and it was a weekly low. So I was like, if we're falling out of bed that far, I considered getting in one here, but anytime I tried to get in one, I would think, okay, well, maybe we'll take this fair value gap. It would go an extra 100 points above it. And so I was really scared. I tried a couple of times and got stopped out. I was like, I'm just going to wait until it gets down here and then try to catch the reversal there because I figured it would reverse. And it did. It did a beautiful reversal. So we go up, we try to make one more push down. We create the breaker right here, the last up close candle before the run on liquidity. We move away with a very small fair value gap right here. These two wicks don't touch. So that's a very small one. And then we run up, we push down. I thought this was an attempt to get back down to here that failed, and now we're running for the fences. But we just ran that liquidity and abso-freaking-lutely ripped. This is a 62-point candle right here, right back down to this little fair value, this tiny little fair value gap that seems completely inconsequential in the grand scheme of things. But the computer referred right back to it. Touched it, respected it. Both of those candle bodies stayed above the halfway point of it, even though it's tiny. Then we ranged here for a minute. That's a big range. 824, all the way up to 868, 44-point range. I mean, it's just zipping, zipping, zipping. But if you had the cojones, that was it. And so I did get in here. I got in on this one, and I got stopped out on this. And then when it was time right here to act again, I was emotionally exhausted at that point, and I walked away for the day. But my original trade here, my take profit was at 25,000, and you can see we made 25,000 right here. I think I was right above that candle right there, or I was at 25,000 even. I didn't even worry about a candle. I was at 25,000 even. So I figured if we start going back up, that's where we would go. And we did not go in a very nice fashion. It was a sweat fest fashion. um, Goodness gracious, volatility. I would have much rather been in the short, because that's a huge move. That's like $1,200 on one freaking micro. From here to this red line, from if you got in here or that pushed back up, you got in, you sold it right there, somewhere in there around that area, that maybe the fair value gap that pulled away from it, let's say right there, and you just went to that red line. Oh, it's 340, let's say 350 just to round up. That's $700 one micro. $700. I think if I'm up and I start seeing fair value gaps to the downside, I might have had it in me to add a little bit of that on the way down. So 750 would have just been a good starting number. This move back up, which in the afternoon is usually pretty choppy anyway, it would have been fine too, because your entry would have been at the low of these, and your stop, even at 25 points away, would have put you down here at 800, and you would have been just fine. I put that arrow right there because I said that right there is the low of this run, and I don't have the balls to take another trade. But I said I'm going to put it on there, and I bet you anything that's the low. And walked away. I didn't even look at it again until I started making this video, and it was the freaking low of the day. So I put that arrow there to say that's the one that stopped me out. That's the one that made me throw up my hands and say there's going to be a better trading day. And I don't know that I would have survived all this. If I would have got in, I don't think I would have survived all that. I would have been killing it for a $20 gain or something, or getting stopped out at break even, or you never know. But I don't think I could have held it all the way to here. It was just too volatile for me. And we also had lower hanging fruit down here. This is a volume imbalance on the daily chart. It's like an opening gap, essentially, on the daily chart. And so pushing all the way down here could be possible. It actually could be a draw as we go into NFP. We may want to go take that out. Definitely having kind of a bearish week. Does that mean we're going to remain that way? I don't know. I've seen a lot of times before NFP, the market pushes down, takes out levels, and then just rips higher if that number is satisfactory. This is the people with deep pockets driving the market where they want it to go so they can load up a position. And they don't want to buy that position at the highs. Look what happened to gold and silver. I'm surprised it didn't go limit down. Silver lost. It went from 118 all the way down to $74, and like most of that happened in a day. That's well over. I think the equities, it's like 6 or 7%. They lock it down. So what made this one a nail biter was taking these 4-hour lows. Normally, that's our bounce point. That's where we look for a reversal. When we took this one, I'm looking for a reversal that made a higher low here. I think I got in there. It was up $100 or so, and then got smoked. I don't think I actually got officially smoked, but I got like break even, stopped out at break even. It's frustrating when you're up $100 or $200 and then you get stopped out at break even, but that's also telling you something. The market is not doing what you expect it to do, which is go back up to settlement. It's going here and it's falling out of bed. So maybe you should change your idea of where this thing's going and start looking for the lower hanging fruit. It's difficult to read sometimes. Trading is not easy, even with all these tools, even with everything like, as it is. It's difficult. It's still difficult to have the confidence to hold. But as time goes on, you will gain confidence. And as long as you're not risking too much on these trades, like I risked $50 on Nasdaq today. I needed to risk $200 to stay in a trade, I think. But on some of them, I would have lost $200 guaranteed. Now let's look at ES. It's kind of a different situation. NQ opened with a gap down. ES opened with a gap up. And it's above a 4-hour regular trading hour high. The pre-market high was way up here, and we never made it back to it. But as it opened, where NQ is just chopping in between its first candle, this one's going up and up and up and up, and then falls out of bed. That initial fall where NQ hit the low of its opening candle, this is where ES was. And we rip down, go back up, and then start ripping lower. That's that first initial push. But ES did not take any significant levels down here. Its 4-hour low was way down here. So there was a little conflicting data. And then we go back up. This is the touch that NQ had. I can bring it over here and show you. And it's that touch right there. That's this push up for ES. So it was a little confusing there. Another push back down, a higher low. We did not validate the breaker, or we went a little bit below it. Ripped right back up into the opening range again. A lot of people call this first candle the opening range candle, that first minute. And then we started just trickling back down. It didn't race back down. But eventually it did. It found its legs and it came down and took out this 4-hour regular trading hour high. Let's look at its reversal. Very similar, but it actually respected the breaker very, very well and not the fair value gap itself. It took out the entire fair value gap. But once we bounced around down here a little while, we went on that nice run, that nice choppy, big swing run all the way back up to recent swing highs, eventually that one. But this was after market closed. Yeah, that's right before market close and right during MOC. So I think aiming for these highs would have been your best bet on that one. I did do something a little bit looking into other markets, looking at this opening range of the other markets. And I've seen in Asia as well as in London, their first candle. Asia would be 5 p.m. is their pre-market, 6 p.m. is the open market, Texas time. So in New York, that would be 6 and 7. So 7 p.m. New York, you do this on the first candle. I actually did it at 5 p.m., the very first candle of the day. And I saw similar price action on a lot of the days. When it does break below and come back and revisit, it'll oftentimes go on a nice run, sometimes a very, very big run, and other times not. And then when it's not going to want to do that, it'll just chop between here, maybe poke up above and come back below. That's what it did yesterday, just going like this back and forth. And I don't think it ever, during Asia, ever left that area. But other days, it did leave the area and it made a lot of points. So if you don't have the ability to trade New York, you don't have the ability to sit here and mark out these candles like that, look into Asia and do this same thing on that first candle. I have a program where you can, let me put extended hours. I'm just going to show you one. But I have a program, it's actually Tradeovate. I know that daily candle down here, this one right here, it hasn't opened because it was a new day opening gap. I just have to go find it. But we'll show you and we'll see what's up. I guess I could pick any daily candle open. This is an open of a day right here. Yeah. So this is an opening candle right here. And this is that gigantic one. I can't remember if it was a good one or not. When you see one that big, my first knee-jerk reaction is stay the heck away. But you can see we got the high of it here, the low of it there. So we would be waiting for a break below the low and then a continuation of that. And we got a touch of it right there, pretty close to it. And then we pushed lower, eventually pushing much, much lower throughout the night. So if you had a level down here marked, that's a nice little trade for Asia. That's a couple hundred points. Let's see it. Yeah, 410 all the way down to 243, 150 points. Not bad. And it actually stayed below that. If you put a line on it, you can see we revisited it, but we didn't really violate it that much, just a little bit above it, 40 points above it, and then got back below and then fell out of bed again. And this is during the midnight open. You know, this is a different day. It's a different day. This is the new 6 p.m. open right there. So that day, I'm still not back to that. Man, I'm going to have to go a million miles. Any 6 p.m. open will do. I wish they would let me filter it. Here's a 6 p.m. open right here. So you use that candle, the very first candle that prints as soon as we start trading again. You could use the 7 because that's the actual Asia open. But on my stuff, I was just using this, and it was pretty good. So I need to go back and see if the other one works better. So here would be our high, and this would be our low of Asia. So that's a 6 p.m. candle. So we just watch it and we wait for a break below. We don't get it. We got a little push above, but nothing extraordinary. And then back down, took out the lows. When we go down here and we take out the lows, now we've created a little breaker right here. That would be our breaker. And so we can use that to take a trade off of. By this time, it's already 9 o'clock and we haven't done much of anything. So we could use that breaker and try to take out the high. Once we got up there and took out the high, we can use the breaker to try to take out the low. Right there's the breaker to the downside. Let me make it the proper color and make this one the proper color. So we know. So this will be our bullish. This will be our bearish once we took out this high, the high of the day for Asia session. Reversal, fair value gap, jump in, aim for the low of the day. Just so happened we wanted to go a little lower. And lower still. And lower still. And wow, would we have ever done well on that trade? That's all one day. 11 p.m., 6:30, New York opens, continues down. We ended up closing the day about right here. Man, oh kind. Can you imagine if you got into a trade in Asia like that and you just held it till 3 o'clock the next day? Sweet Mary. That would be one heck of a deal. I'm going to try that one night. I'm going to try it one night. I haven't ever, I actually did do this probably about a year ago. And I remember talking to my buddy Adam. I said, there's something to that first minute candle. I noticed that I was actually looking at it as a breaker system. So I was looking at it as, instead of the first candle, I was looking at it as this. And Hogue on Topstep, he trades this every day. He takes a trade off of this, win or lose. If it breaks higher, he'll take it, keeps his losses small, so it's not going to clean out his account. If it breaks lower, he'll take it. I don't know what his criteria is as far as what makes him enter or whatever. I look for a fair value gap above it. I want to see it run. Let's look at one more and then I'll end it for the day. 9 a.m. That's New York. Man, that's a big first minute candle, isn't it? Must have been a news driver that day. So where's a 6 p.m.? Right here. Let's see what this one did. So if you have your 4-hour highs and lows, you mark those out between 4 and 5. Give you a pretty good idea of what's going on. Okay, so this 606, 605, 604. That's it right there. Let's mark it. There's the high, and here's the low. Look at that. Asia, open at 5, push down. Take out that wick. We push back up to the low of that candle, pull away with a fair value gap, jump in, and I bet you somewhere around here is a 4-hour low. We could take that wick, even if it isn't. Bam. How many points? We got in there, 931. We get out 850. That's a good round number. Yeah. Almost 100 points. If we got in there, or even at that. 85 points, one micro, $170. Just like that. What if you did 2 micros? 4, 5. When your account size grows enough, you can do a mini there. And that's $700. But don't do it when you only have $2,000 margin. Wait. But yeah, that's something you could use for Asia and London as well. Of course, the driver, the big one, is going to be New York. Always do it in New York. But if you don't have the opportunity to trade New York like this, maybe Asia would be something you take a trade off of. Just do one, because it will chop in Asia. It will chop back and forth between here, especially if it's a really big candle. And you don't want to take 10 trades in there losing $50 a pop, because now you're down $500 before New York even starts. But if you can catch one like this, catch it. Catch it. Go back test them. I mentioned I can filter it on some of my platforms. Tradeovate, Ninja Trader, they'll give you a free account. If you sign up for the Ninja Trader Arena, you can do it in there. You just double click on the candle and do a custom time frame. So you can set it does military time. So you would set it for 1700 open and then 10 o'clock. And it'll just show you for that first 5 hours of Asia, what price did. And you can frame in your candle and see how many days does Asia break lower and keep going lower, or break higher and then keep going higher. It's quite a few. They're bouncing off of this first 1 minute candle. So there are some days where it doesn't do very good. But, that happens. That's when the news came out. That's a sweet little trip right there. Even went back to it there. pulled all the way back and took that low. That's another 50, 60 points that you could have grabbed just based off of that low of that candle right there. And this would be during London. That's London. So it took that high, bumped that, and came all the way down, took that low. This may be the